this morning with us, moderating the webinar, we have Mr. Yang Eugene, who is a partner at RHTLaw Asia, who is also the co-head of our corporate and capital markets practice. You can see him on screen now. He'll be moderating the whole presentation as well as a panel discussion. Also, we have with us Mr. Shervin XX, who is the director of RHT Capital, Mr. L. Lee, who is director of RHT Communications and Investor Relations, and we're very happy to have Mr. Rick Chan, partner from Azaz, to join us in this webinar to give his perspective as well. So without further ado, can I hand over the presentation proper to Mr. Yang Eugene? Thank you.
Thank you, Leonard. Good morning, everyone. Thank you for taking the time to join us for this morning session. The genesis of this webinar came about because of recent discussions that we've had with several of our listed company clients. And then they were talking about, okay, whether they need to make, certain announcements due to, deterioration or changes to their business conditions caused by COVID-19, and most of the time specifically because of the circuit breaker measures. So we thought it might be useful just to, have everyone on one forum where we can then discuss this and share notes, compare notes with everyone present. I think the question that everyone has really is, when does a development arising from COVID-19 require a public disclosure? And if it is determined that such disclosure is warranted, what exactly should the company be announcing? So maybe as a start, we will just run through very quickly the relevant rules relating to this. Where can these rules be found? I think most of you will probably be familiar with these rules, having been listed company practitioners for some time. But a few new rules were introduced with the recent amendments on the 7th of February to the listing rules. And of course, there was a publication, a media release on the regulators column on the 22nd of April, which also provided some guidelines. And then we'll round that off with some case studies or some examples of what some other companies have done, and then followed by our discussion. The rules generally referred to are actually the SGX main board rules, but you will find the equivalent rules in the Catalyst listing manual, of course. So what are the disclosure requirements? Well, I think this is something probably everyone is familiar with. It's under Rule 703. Basically, you need to make an announcement if it is necessary to avoid the establishment of a false market in the issuer's securities, or would be likely to materially affect the price or value of the securities. Then under Rule 704, you have specific disclosure requirements, of which there are quite a few, but this one might be of interest to you. Issuer must immediately announce, amongst others, any adverse opinion, disclaimer of opinion, qualified opinion, or emphasis of matter, including any material uncertainty relating to going concern on the financial statements of the issuer or the subsidiaries or associated companies, if the latter has a material impact on the issuer's consolidated accounts or financial position. Now, some of it, this would probably be familiar to you, but there have been some tweaking of the wording since the 7th of February. The exchange has inserted any adverse opinion, disclaimer of opinion, and material uncertainty relating to going concern. So you will not find this in the rules, say last year, but with effect from this year, you will see this additional wording under Rule 704. And of course, those are the broad rules, but under the SGX disclosure policy under Appendix 7.1, which I think most of you ought to be familiar with as well. There's a whole list of matters there which are likely to require immediate disclosure. They've stated the list is non-exhaustive, but even so, out of that whole list of items, we have culled or collated, just a few of them, which may be relevant in the current environment. The first of which is firm evidence of significant improvement or deterioration in near-term earning prospects. The second one, acquisition or loss of a significant contract. The third one, provision or receipt of a significant amount of financial assistance. Fourth one, occurrence of any event of default under any debt or financing agreements. And next one, significant change in capital investment plans, including plans to build factories or acquire machinery. I mean, assuming you've already announced that you're going to do this before COVID-19 started, and then you've changed your plans, that's something that might require an announcement, disclosure. And lastly, significant disputes with your subcontractors, your customers, suppliers, or any other parties. Now, what is actually quite interesting is that with effect from 7th of February, 2 new guidelines were added. And one wonders, the timing of the exchange was quite impeccable, really, because this came on the 7th of February and the effects of COVID-19 were felt increasingly thereafter. So one of them is the loss of a major customer or significant reduction of business with a customer. Another one is a major disruption to the supply of critical goods or services. I think these two are extremely relevant to the current situation. And if you're facing this scenarios, then I think it's definitely worth a discussion, at least internally, amongst the management team as to whether it requires an announcement. So on top of the rules and Appendix 7.1, there is also Practice Note 7.1, which provides some guidance on what exactly you need to disclose. And these are quite financial related, actually. So at paragraph 5.2 of Practice Note 7.1, it is stated, where the issuer becomes aware in the course of preparing its financial reports of significant deviation of its financial position from what was previously reported, it should disclose the significant deviation immediately and not withhold it until the regular release of the quarterly, or well, previously quarterly, but now half-yearly reports. And in fact, some companies are still doing some form of quarterly reporting now. So I suppose for this, really, the person I can think about, in fact, some of the dialogue we've had actually is with the CFO of the companies. And I think they would probably be the first people to get an inkling of this coming to pass. And I think immediately he should then, enter into a dialogue with the CEO or with the management team as to how they want to deal with this. Paragraph 5.4 goes on to say that apart from the financial reporting cycle, the quarterly or half-yearly reports, an issuer may become aware of material changes to its near-term earning prospects caused by general trading trends or specific events or developments during the course of its business, which may be likely to materially affect its earnings. Now, this item ties in with item C of paragraph 8 of Appendix 7.1, Corporate Disclosure Policy. So this might be considered material information which might have to be disclosed immediately. And we've had some conversations whereby the company was going to be releasing a profit guidance or profit warning anyway. They said is it possible to wrap that up in that particular announcement. I suppose if the profit guidance or profit warning is quite imminent, yes, certainly that's something the company can consider doing. But if it is not, then the company needs to think about whether it needs to release a separate announcement. So these are basically a quick walkthrough of all the relevant rules and practice notes that we think are very pertinent to the current economic situation. And on top of this, before we actually go into the discussion proper, on the 22nd of April, as many of you would be aware, Tan Boon Jin, the CEO of SGX, actually released one of his regular publications on his regulators column. And the point he made is that issuers cannot rely on broad stroke explanations pinned on a decline in general economic activity to explain their outlook. So they have to be more specific than that. And so they have emphasized again, practice note 7.1. And then it went on to say that where matters are still developing or undergoing further assessment, and issuers are not able to quantify the impact, issuers should still make disclosures which would reflect its current state of affairs, and including the strategy or any steps that they might have taken to address the effects of COVID-19. Well, I suppose this is some guidance, but one also has to bear in mind Rule 7033, there are certain exemptions in there. And one of them actually states, what if the information is insufficiently definite to warrant disclosure? That is an exception to the requirement to disclose. But balanced against that, there's a statement now that says that where matters are still developing or still being assessed and you cannot quantify the impact, you should still consider making a disclosure which will reflect the current state of affairs. So again, companies will need to balance sort of accuracy in what you disclose versus wanting to put something out there early so that shareholders have some idea as to ongoing developments. So these again are a list of issues that were set out in the regulators column for companies to consider. It's a bit of a checklist, but it's not exhaustive as to whether it's something that warrants disclosure. So if the first one, there's material disruption to supply chains or material impact on demand for your goods and services, goods or services. If you're facing any material operational constraints, now, well, I guess almost everyone in any field of business are facing some form of operational constraints, isn't it? Because of particularly the CB measures, our circuit breaker measures, which are going to be easing progressively, but nevertheless, everyone is facing some kind of constraints. So, but when does that constraint become so significant that you actually need to make an announcement? That's a question. And of course, if you're going to mention a constraint, then you also need to mention what you're doing to deal with them. After this, I'll show some examples of what some companies have announced. So that's also some, some things which you could look at and consider following. Of course, if you've been in breach of any COVID-19 restrictions that you might be penalized for, that's something that you might want to have to disclose. Any impact on your earning prospects, right? You need to provide detailed explanations as to the reasons for revising any prospect statements that you make and explain how COVID-19 has impacted the relevant quarter or half year that you are reporting on. If a previous earnings guidance is withdrawn, then you must provide a detailed explanation and reasons as to why it is withdrawn and what has happened, what has been the impact on performance leading to the withdrawal. And also if there's any impact to your liquidity. And again, this is an area which I think many people are probably affected. Is there deferral of significant payment from a major customer? Any uncertainty, material uncertainty on ability to meet debt obligations? Any material action being taken by the company to conserve liquidity or to raise funds? And any changes to dividend policy? I think some companies have announced changes to their dividend policy arising from COVID-19. Some others here: impact on your balance sheet, any impairments, changes to capex as previously mentioned, and impact to your contractual obligations. For example, have you or have your counterparty to the contract exercised temporary relief measures under the COVID-19 Temporary Measures Act, or exercised force majeure clause? It means acts of God, as again, this is a topic for an entirely different seminar, which we've actually run already for some companies. And I think we've had a general session on that, as well as to what constitutes a force majeure to allow you to terminate a contract, or if the other party is trying to terminate a contract, what constitutes force majeure. A lot of it depends on the wording of the force majeure clause in your contract. So you need to study that carefully and then seek advice if you need to. As you know, under the Temporary Measures Act, contractual obligations can be deferred for 6 months, starting from April, so that expires currently in October of 2020. But one question that does arise is what happens after October 2020? Is there going to be a tsunami of claims? And that is something that I think people are quite worried about as to what happens after October. So if you have exercised your rights under this temporary act, is that something that you wish to announce? Or if a major counterparty has done so, again, is that something you might want to announce? Threats to your viability, that's quite serious. If there's any threats to your ability to operate as a going concern, and if you have had to take drastic steps to manage your costs, again, is that something that you might want to announce? And of course, impact of government measures. Have you been affected? Well, almost everyone would say yes to both questions, whether you've been affected and whether you have some support measures that you can avail yourself of, right? Especially, particularly after including DPM's Parliament statement yesterday. But when does all these things become significant enough such that it warrants a separate announcement? I think for most companies, probably not. I mean, people are just taking the measures and doing what they need to, but maybe in certain circumstances, it does actually warrant a specific announcement on that. So it is stated that where information is insufficient for issuers to disclose the financial impact with certainty, issuers should provide a detailed explanation for the non-disclosure and sufficient information to enable investors to independently assess the financial impact. So that also, a question arises, how feasible is it to provide such explanations? In a way, to some extent, it's almost like you're asked to announce a negative. You're supposed to explain why you're not disclosing. So that in itself poses some challenges. And what is sufficient information to enable investors to make independent assessments? I mean, isn't that quite subjective also? Because one investor, a very casual investor, might find that, okay, this is enough for me. But a sophisticated or savvy investor might really want to drill down into the numbers and feel that that is not sufficient information. So again, where do you draw the line? Because it's often in the eye of the beholder. And the problem with that is that I think, and this probably that's something that's running through the minds of every company. Sometimes you don't want a situation where the cure is worse than the disease, in the sense that if you make an announcement and it gives rise to a lot of speculation, then that may not be helpful to anyone, because the company could well come out of it, right? And if this has caused undue alarm, then it's just adding to the company's problems, even though the company's business is actually recovering, particularly in the months ahead. So I mean, this guidance it can be tricky as to exactly what you need to say, when you need to say it, and how is it to be disclosed. And I think we're very fortunate because we have our panel of experts with us today, that we can talk through some of these issues. Well, I think by now a lot of people must be wondering, what exactly am I supposed to say, really? So I think it is helpful that perhaps we look at some examples of what some other companies have done in the last few weeks and few months. So one of them is Boustead, and it said, to comply with circuit breaker measures, the company's principal design and build subsidiary will be suspending non-essential construction activities at all construction sites in Singapore. So this one is, I think, for construction companies, this is probably something which it's true for almost everyone, unless you're in essential services. So if you're a construction business, this is something that you could consider. These examples are not necessarily positive or negative examples. They're just examples, and I think it's up to every company to decide whether it is useful to follow or not to follow, or to do something different or do something more than what some of these companies have done. So it goes on to say that because of the fluidity of the COVID-19 pandemic, the extent of the impact to the financial performance and operations for FY 2020 and 21 cannot be reasonably determined at this point in time. So there is an example where they are actually making sort of a negative statement. A negative as in they're not saying something positive, but they're saying something that we cannot determine it, But nonetheless, they do caveat that by saying that they continue to maintain an extremely healthy balance sheet and a backlog of order books. So it sounds to a reader that once the CB measures are eased and they can go on to execute their projects, they should be able to recover from the current situation. So this is, I would say, it's a considered and balanced approach to announcing. Another example from a construction business to a developer, UOL. So what did they say? So they said that the COVID-19 pandemic has affected many economies and businesses worldwide. The company monitors the situation closely and adjusts and adapts its strategy and operations to mitigate the effects. However, the situation continues to evolve and remains uncertain and not possible to assess the full impact. So this is an exact example of saying something, but actually not having a lot of concrete information, because probably they're not able to say very much more, but they have made a statement. So that is an example of what we just talked about. So, but they did say, of course, that there has been a slowdown in transaction volume. And of course, Showfats cannot be viewed at this time. And again, if you are in the property development business, this is something which probably it's going to affect you, and something you might want to consider whether you want to announce if you haven't already. Right? And then they show their balance sheet, which is reassuring to show that it is still strong, and that they don't have a huge amount of debt that is going to mature imminently. And they also talk about some cost management measures that they have taken, like reduction of salaries, deferment of non-essential capex, initiatives to reduce OPEX, and value engineering for what they have done. And of course, they have tapped government assistance and grants. So I think they're quite transparent in that respect. They actually disclose the amount of grants that they've tapped. Going from these bricks and mortar businesses to a name that I think everyone is very familiar with, Chang Koe. They have, of course, with the closure of the retail malls, they have been quite severely affected. And I'm not sure some of you might know, they actually have a sort of a restaurant business called Curry Times. There are a few outlets. I've tried some. The food's quite good. They have not paid me to say that, but they're still available, but only for takeaway and delivery. So they have said something about this, and they have actually gone on to say that they've reduced their frontline staff by approximately 20%. So that is quite transparent. And also, I think what many companies have done, and certainly this is a conversation we've had with many of our clients, they have put measures in place to manage manpower costs, such as no pay leave. They've implemented no pay leave schemes. So I think in this case, Chang Koe is quite transparent in talking about this as well, just like UOL had been. Right. And they make a statement to say they're grateful for the government support, such as JSS, property tax rebates, and there's more support coming for retail businesses. And they end off by saying that they've been prudent with spending and provide the crisis does not deteriorate. They are of the opinion that they have sufficient cash balance to buffer against COVID-19 in the next reporting period and for the next 1 year. So I think they would be fairly confident we will make a statement like that. So, I mean, I would say that to investors, that is reassuring. And finally, Singapore Airlines. Of course, everyone probably, if you just read the papers, you'll know what's happening. So I suppose a company like Singapore Airlines would have had a whole army of advisors, from legal advisors to, investor relations advisors to the auditors, and advising them on what they should or can or should not say. So I'm not saying that they're necessarily a gold standard, but nevertheless, it's, I think, worth looking at them as a business that has been, severely impacted, and what have they done, what have they announced, what have they said. So they, of course, were quite upfront to say that if had over 99% year-on-year decline in passengers, and so they've been quite transparent in their disclosure. So I think that comes to the end of the materials to be covered. But this is, I think, where the fun starts and where we have our panel of panelists here. I wish we could all sit around a sofa and have the audience right in front of us and have this discussion. I think it would have been more efficient that way, but let's make do with what we have. So we have assembled a panel of different experts, different expertise. Myself, obviously, from the legal aspects. Shervin is the director of RHT Capital, which provides continuing sponsorship, in fact, full sponsorship services to listed companies. So in a way, you could say he's in the role of a quasi-regulator. Elle comes from an investor relations background, and I think his input would be very, very useful when it comes to not so much what to say, but how to say it. If you have to disclose something, fine, you have to disclose it, but how can you put it across in a way that is maybe not too alarming, in a way gives some measure of reassurance to shareholders? So that is a question which I think he will have a lot of insight on. And certainly last but not least, and we're very grateful for Rick, um, who heads the assurance at Mazars, to join us, to give us the perspective from a frontline auditor. And I'm sure he must have had some discussions with his own clients. And maybe he can share some insights, of course, respecting client confidentiality.
Hello, hi Eugene. Good morning. Hi everyone.
So perhaps I could start maybe with Sherwin, because I'm sure you're the next best thing to having the exchange actually present at this forum. So I think having seen all the guidance, all the rules out there, as well as some of these examples that I flashed, but I know you have a lot of examples from the companies that you sponsor, and they've given you a lot of scenarios. So perhaps maybe the names of the innocent or the guilty may not be disclosed, but I think the factual scenarios that they face, if you can share some of the things that they have faced and some of the things that you have told them, some guidance you've given, I think that would be very, very helpful to the audience.
Sure. Thanks, Eugene, and thanks everyone for joining us this morning. And also thanks to RHTLaw Asia for organizing this and giving me this opportunity to be part of the panel discussion. Well, as Eugene mentioned, the topic of discussion actually is quite interesting given the current situation. And as sponsors for Catalyst listed companies, it also becomes quite challenging for us. Challenging as well as interesting, because this also gives us an opportunity to understand the ground realities, understand the business operations of our clients, and also to see how the COVID-19 situation has impacted their businesses, because it's not only unprecedented, but it's also evolving. Well, the listing rules does provide general guidance. Before the exchange came up with their guidance on what to disclose during this COVID-19 situation, Eugene has gone through those corporate disclosure policies in general and what is expected out of companies. But given the situation, which is quite unprecedented, and in fact, the regulators, I must say, recognize it pretty early. And they did try to take several measures and also try to come up with a lot of public announcements. If you go to the exchange website and if you look through the regulatory announcements page, you'll see quite a long list of announcements that exchange has come up with. And this is basically to give opportunities to companies to go out there and tell to the several stakeholders on what they are encountering in this given situation. And these relevant stakeholders can then go through this information and make certain investment decisions and also keep track of the developments as well. Now, as regulators, or rather, generally, no one likes surprises, especially if they are unpleasant ones. And if you were a regulator, I'm sure you would expect and hope for the same as well. Now, there were some initiatives taken by Exchange previously as well. Somewhere around May 2019, when the United States had banned US companies from supplying Huawei and their affiliates with critical components, the regulators reached out to us as sponsors of several listed companies to try and understand whether this would have any uh, direct or indirect impact on the business operations of companies, and whether any of our clients had any direct relationship with Huawei as a customer or supplier or distributor. So basically, this entire process or discussion we had with Exchange is for them also to get an understanding whether there's any material adverse impact generally to the Singapore market as well. Very recently as well, with the collapse of Hin Leong and Ocean Tankers somewhere in April 2020, again, we had another discussion with the exchange to give them an understanding or a feel or indication as to what could be the potential impact to the Singapore listed companies here. And with the COVID-19 issues, the impact to companies, to their business operations as well. We did have some discussions with them, and you would have gone through the list of things that Exchange expects companies to release an announcement about, to also inform the investors what's going to be the impact of their business. Now, apart from all these announcements, I think Exchange has also tried to reduce the impact to companies, to listed companies in Singapore, by coming up with, the suspension of the financial watch list. So for the period in review, which is June 2020 and December 2020, Exchange has suspended putting companies under the financial watch list criteria. Now, this is basically for the main board listed companies. They've also increased the share issue limit of up to 50% to main board companies from the current 20%. So this will enable companies to try and raise funds to assist their business operations and their working capital as well. There has been care packages that have been announced by Exchange for listed companies, and also to facilitate their AGM during this period, because companies have to put in certain additional measures to hold their AGM, like hold it through online systems, allow shareholders to participate through different means. So all this have resulted in additional cost to the listed companies. And I believe for certain qualified companies, Exchange is able to provide a grant of about $5,000 per company. So all these measures have also helped companies during this situation. Also, before the CB measures, or rather when the CB measures were introduced, we received quite a lot of feedback from companies on their difficulties in doing their financial reporting, whether it be their quarterly or half yearly, or especially their full year results, because they rely on the audit process, to what extent the audit process has been completed, to enable them to announce a fairly reasonable full year announcement, although it is unaudited. There were also feedbacks received from companies right at the start that, as situation was evolving, companies were quite confused on how do they hold their shareholders meeting. So all these directions from Exchange has helped companies as to what needs to be done and how it needs to be done. So with all these things, Exchange has identified all these difficulties. They have taken those things into consideration and have also provided the necessary extension during this particular period for companies to not only release their full year results, but also hold their AGMs at a much later date. Now, specific to the COVID-19 situations on the businesses, as sponsors for listed companies, there are a few questions that we keep facing on a regular basis and on an everyday basis as well is when to disclose, what to disclose, and how to disclose. Now, just to put things into perspective, as Eugene mentioned earlier, uh, there were a few changes or amendments to the listing rules. And one of the key changes were the cessation of the quarterly reporting. Now, when the quarterly reporting was implemented, I think it was back in 2003, about 70% of the listed companies in Singapore were required to do quarterly reporting. Now, with the cessation of the quarterly reporting, about only 100 listed companies are required to do quarterly reporting. And this particular list will be updated as and when exchange reviews or as and when companies fall under those specific conditions that require quarterly reporting. Now, what this has done is there's a large chunk of companies that will only announce their results performance 6 months later from their previous results announcement. So during this period, shareholders or investors are not really aware, especially during this COVID-19 scenario, as to what's happening with the company, what's the impact, what's going on. Have they put in place any mitigating factors to manage the situation? So this is where the exchange came in to and identified that, okay, there could be lack of information because of this and the timing of it as well. So exchange came up with this guidance to companies, which has also helped us as professionals while advising our clients as to how to assess the impact to their businesses. Of course, the CFOs, the CEOs, the management, they are the best persons who would know how to assess the impact and to what extent the COVID-19 situation has affected their businesses. As professionals, we are there to guide them, to ask the right questions, which then leads to proper information to be disclosed while preparing the announcement. So when we have this discussion with our clients, some of the key aspects we look at is basically the business segment, because there are certain industries which have been affected much higher as compared to few other businesses. There have been few countries which have been affected more as compared to other countries. So geography is a key area because the listed companies may be based in Singapore, but their main business operations may be all over the world. It could also depend on where their customers are, which part of the world they are operating in, and whether the COVID-19 situation have affected these customers and hence having an impact on these listed companies as well. The F&B companies, the hospitality companies, hotels, property development, manufacturing facilities, because of things affecting the migrant workers in Singapore. So all these are some of the factors that we consider when we are discussing. However, the level of impact or the materiality of it has to be assessed by the CFOs, by the key management staff of our clients. So we go through this discussion sessions on an ongoing basis so as to understand as to when would be an appropriate time to make an announcement. In addition to this, we also try and discuss with them if the companies have some contractual obligations with their banks, to go and try and talk to them well in advance to see what additional facilities can be put in place to support them during these months, especially although there are government grants, support from government in all these aspects, but it's also essential that companies do take proactive steps uh, to try and see how they can minimize the impact to their business operations. Now, the guidelines provided by Exchange actually are quite comprehensive if you look at it. They do cover majority of the scenarios that companies may face. So I wouldn't go through each and every of those aspects, but I will just briefly share some of the experiences or some challenges companies have faced during this period. One key aspect I would like to mention is, I believe Rick will go through it in depth later, but some of our clients, because of the COVID-19 situation, had to seek extension because the audit process could not be completed, or even if they were able to complete, but they needed additional time because of the CB measures. Now, what has this led to is the auditors would review your cash flow forecast, will review your going concern uh, at the point of time when the auditors are going to sign off their audit report. Now, the auditors will look at several scenarios to support the going concern basis as well. And given the COVID-19 situation, a lot of businesses have been impacted. Their cash flows have been affected. Uh, their customers have been impacted as well. So if companies do their cash flow forecasts on a worst case scenario basis, there could be, if not a going concern issue, which requires a qualified opinion or other qualifications by the auditors, but there could be an emphasis of matter, which also then requires a separate announcement by the company. So companies need to be prepared for such and also look at their forecasts appropriately considering all these factors. Now, timing of the announcement is also another aspect that we keep getting asked about. When should we announce? Because although it has affected companies, it may not have materially affected them yet. So this assessment has to be done on an ongoing basis. And I would recommend companies to avoid timing such announcements, but to announce it as and when they are aware that yes, at this stage, it would be good to make an announcement to give a heads up to the regulators, to investors, or to other stakeholders that there is a potential impact. Now, as previously also covered by Eugene, sometimes companies are not able to quantify the impact of such measures or such other operations, but companies can definitely look at what has been the trend in the past weeks or in the past months and give an indication that if this continues, it may face a challenging situation for the next few weeks. So you not necessarily need to give the exact quantum of impact, but you can give an indication as to what could possibly happen without putting too much speculation into it. And last but not the least, another aspect which I believe L would probably cover is companies can then take this opportunity to also talk about in their sustainability reporting, the reports, because there could be situation where a large number of companies would be in the midst of preparing their sustainability reports. It could also be a good example where companies can include something in their reports to talk about measures that they've put in place to tackle the situation, like how are they managing the situation, how they contribute to each of the ESG factors, like what are the campaigns, what are the health awareness campaigns, contribution to the society. So all these things could be a good opportunity for companies to go out there and tell the market as to what the company is doing. And the last point that I would like to cover is with regard to, companies come to us asking, we are very close to releasing our results announcement. So can I cover the impact of the COVID-19 situation under para 10, where they talk about the impact to the business in the next 12 months? Can I do that in this particular announcement, or should I do it by way of a separate announcement? I think this aspect I will try and cover later after all the other panelists have given their perspectives as well. Thank you, Eugene.
Okay, all right. Thank you, Sherwin. Yes, we'll circle back again. But yes, let's maybe we move on to Rick. I think something, Sherwin, you touched upon about materiality. I think that is something which probably every company that's considering whether there's a need to make an announcement or make a mention of something in their routine announcements. How do you assess? How do you determine, whether something is sufficiently material? And that term is used time and again, also in the rules and in the guidance, but no one actually says what it is. So maybe Rick, as a frontline person looking at all these numbers, you'll have across all kinds of different industries. How do you make sense of what something may or may not be material?
Okay, I think on the topic of materiality is always very subjective. I guess the question of materiality, sometimes looking at it from the point of view of the auditors when we look at the audit work itself, and of course from the point of view of announcements, right? So as far as the announcement is concerned, I think you will look at from the stakeholder point of view. From the stakeholder point of view, is it material to my decision making? Right, so I believe the listing manual did cover as far as the how to determine materiality in terms of impact to the financials, as to whether this announcement should be disclosed accordingly. Yeah, so that's as far as materiality is concerned. But I think apart from materiality itself, I think the main thing to me is that there's a lot of uncertainty as far as the these announcements are concerned, because if you know the impact of COVID-19 itself, there is a lot of uncertainty, and it's always very fluid, and it's a moving goalpost basically. And because of the subjectivity of this disclosure, sometimes announcement or this disclosure can be quite confusing. I understand that all stakeholders want to have more information for their decision making and more timely information, but is more disclosure sometimes better? Is it more confusing to the recipient? So, and a lot of the disclosure, as you can see from the guidance over there, is actually more of a narrative than just numbers alone. So as you have to craft, how you craft the disclosure of such to the public can be very, very challenging.
Yeah, but is it, I mean, usually people think of materiality a bit as a percentage or some kind of a threshold. Would you, whether it is on the P&L, on expenses, on fall in revenue, is generally what would your ballpark? Again, I think it probably depends on the business and the industry, but is there some kind of a ballpark range that you think, okay, if you cross this, you might start wanting to think about whether it is material, or if you exceed a certain amount, definitely it's something quite serious.
So as far as the revenue is concerned, generally we look at about between 5 to 10% as the gauge revenue, right? But then again, most stakeholders do not look at revenue; they look at the bottom line, because that's the impact to their earnings. So again, depending on the business, how is that the 5% or 10% change in the revenue so affect the bottom line? So at the end of the day, we look at the bottom line as far as the profit after tax distributable to the stakeholders. whether it's a 5 to 10 or 10% impact.
Okay, so you think anything 5 to 10% is something that they should start looking at? I suppose if a company is very, very proactive, you know, you can start looking at the top line first, and then you know, but also if some of the government measures have helped, right, it might not impact the bottom line as much, and they're able to do cost mitigating measures. So at the end of the day, they might in fact decide, oh no, because the impact is not so great on the bottom line, maybe we don't need to make a, you know, off-cycle announcement on that. You know,
yeah.
Yeah.
But if you look at the guidance over there, it talks about impact to the business, but they also talk about the impact of government measures as well. So I think they are not just looking at net, it's an impact on the overall performance. So I think my view is that it should be disclosed, but at the same time to also disclose the impact of the positive measures that the government has provided for, and that how's that going to offset or mitigate the negative impact from the performance.
Yeah, right. Yeah, I mean, I think some companies naturally would tend to be more forthcoming or open about, you know, what they are doing, and that might give confidence to their shareholders. Some other companies might feel that it's not a business. I suppose if the business is not so easy to understand, it's quite complicated, then you need to tell a more complete story in order for them to fully appreciate the impact. Whereas if your kind of business is very, it's a kind of business that most people say your bricks and mortar kind of business, you know. So most people understand roughly how that works. Then maybe by just giving some guidance, people say, okay, this is what's probably going to be the impact. But some of the businesses are more esoteric, like say fintech businesses, for example, you know, not so easy to understand. So you need to tell a more elaborate story if you want to disclose. Or then, I mean, the worst thing to do, I think, really is to tell a half story, half-baked story, giving, you know, incomplete picture, and then to the extent that you're able to, and then you get investors, shareholders speculating. I think that's something to be avoided. So, you know, perhaps then we can move on to L. I think this is I think for you come in probably when the company having discussed internally, perhaps having spoken to its advisors like lawyers or their auditors, and they say, okay, I think we need to say something, and then they'll probably come to you. I say, okay, we need to say this. You know, how should we go about it? What should we say? So I think maybe if you again from your stable of IR clients, share some of your experiences over the last few months. Then they must have been coming to you.
Yes, indeed. I think today's topic, when we say what SGX expects of issuers in disclosure during COVID-19, this actually ought to be seen also from the angle from the shareholders and investment community, because disclosure information needs to be consumed, and who consume it is largely the shareholders and community, that they need such information to make decisions. Right. So if we will look at from the perspective of shareholders and investment community, they also have their own expectations. What kind of information they would like the companies to disclose. But apart from the what information to disclose, next is the how. Okay, for most companies, I think during this COVID-19 pandemic, most companies are affected negatively. Although there are surely some companies that are affected positively, medical, gloves making, etc. But let's talk for most companies who are affected, say negatively. And when it comes to negative information, most companies take the stand of not saying too much. Why? Because they feel that you know, what's so good in saying something negative about my company? What's so good talking something about decreasing revenue, losing of customers, supply chain being affected, etc. But however, if you look at it from the point of view that if it affects a certain industry, every other companies are affected. And the companies that take the effort to disclose or to be transparent or to be upfront in communicating with the investment community and shareholders, they'll be seen in the better light. So actually, I at this point, actually, I would really suggests that management takes a longer term view, that in the disclosure, think of it as an opportunity of building a longer term relationship with your shareholders, a longer term relationship with the investment committee, which will include also analysts that are covering you, fund managers or other traders that are following your counter, and you build a certain shareholder or investment committee loyalty. You also build your own reputation. You build your credibility on how you manage the situation, how you manage a crisis. If you say something is going to happen, yeah, it's affected negatively, but how the company mitigate this risk, how the company is trying to solve the problems, and you display that the management is on top of the issue. I think if you are doing all this, then you build yourself a better reputation, as opposed to companies that take a stand of keeping quiet. So the part on the how to communicate, I think I would say that the management need to consider this in mind. Really think of longer term benefits, longer term relationship with the investment community. So this is one aspect. Earlier on, Sherwin mentioned about the sustainability reporting, whether in such a scenario, how would it affect? I would like to share from my point of view that ultimately sustainability reporting covers a key ESG factors, environmental, social, governance. I think we all know now how large an impact COVID-19 can affect businesses. To some, it may be short term, but to most, I think it will be long term. It will be long term in various forms. The long term, it could affect your businesses, the business yourself, your markets, your products and services, how things are being produced or how service delivery is being conducted. So when all these are affected, right now, it has a longer term effect. And definitely in the sustainability reporting, we see that there's a need now to address all these issues. If production, operation, and service delivery is affected in certain form, surely in terms of consumption of energy, petrol, electricity, etc., may be affected. And also perhaps even in terms of staffing and employment, which are also issues to be covered in sustainability reporting. So if companies right now, in the midst of this pandemic, as they plan for the future, you also see that how a post-COVID-19 environment would affect all these ESG factors, and therefore start addressing them and start to put them into the sustainability reporting. Yeah. So this is the two things I'd like to share now. Yeah.
Yeah, thanks, Al. I think what you said about the perspective of the shareholders and investors is very, very important. After all, that's your audience. So I think some of us, we are always looking, in a way, looking out for the company. But I think companies need to adopt that kind of mindset as well as to what is it the investor or shareholder would like to see, would like to hear from the company. As you have said, sometimes silence is not golden, because sometimes with silence, shareholders could assume the worst. And at least if you say something and you provide a balanced view, then they can say, okay, that's exactly how you're impacted and exactly what you're doing about it. It gives them a certain level of reassurance, as opposed to just keeping quiet, which could be the instinctive reaction of many companies.
As I like to emphasize, it's really about comparison. Certain companies are, from the investment community, particularly from analysts and fund managers, they group them together in what we call a peer group. As if for this electronic company, they are compared to a few other companies which are in similar business. For a certain business to stand out in such a scenario towards the investment committee, is really about how well they can manage the situation and how well they communicate that to their shareholders, to the investors. If they are able to do so, I think they stand in better regard. There will be greater investor interest in the long run. I think this is ultimately the objective of listed companies. Listed company list for a purpose, and you list to attract investors' attention, so that eventually you reap the benefits of the equity market, lower cost of raising funds, etc., etc. So if basically it's like that. You are in this equity market, you play the game. You play the game in the right way, you reap the benefits. Which is why I say comparing from a perspective of investors, when they look at companies, Company A keep quiet. Company B is more upfront, even though there's negative news, but they are upfront about it. They explain how they are going to solve it. Investors will still tend to like company B compared to company A. I think this is human nature also.
Yeah, so actually, to some extent, I mean, not that we wish there was no pandemic, but still, certain companies, if they seize the opportunity, they can actually use this as an opportunity to stand out from their peers. And I think that's what companies want to achieve, right? At the end of the day, that amongst the basket of companies in the same industry, the analysts look at this company, standing out because during this period where people are often assuming the worst, this company is very proactive in releasing statements and keeping shareholders appraised as to what is happening in the company. It gives them reassurance, gives investors reassurance. So I think, yes, indeed, it could, from this adversity could come actually a silver lining would be an opportunity to stand out from the crowd. And what you mentioned about sustainability reporting, I think next year's sustainability reports ought to be a little bit more interesting, given that if they should talk about their mitigating measures and all that and how it's been impacted them, I think it'll be worth looking through.
I would also like to add one
report.
point that in this environment that we have so much less face-to-face engagement, where in the past, company management can fairly easily, meet up with analysts, meet up with fund managers, meet up with other investors, even conduct lunch presentation and brokerages. But right now, perhaps most things will be done like what we're doing now, which then really, we need to go back to the point how now we need to communicate. You see, so we see now that the mode of communication, the weightage towards the online part, towards using the electronic parts of sharing information becomes greater, and companies need to be aware that in the past of engaging with the investment community may take a certain change. So although we talk about the what to disclose, but the how to disclose and what mode of disclosure, companies also need to consider them, because at this point in time, investors are also at home. They cannot gather somewhere to lim kopi to discuss certain things, but they have to go onto their internet, read on some investment bloggers, read on certain other news, and read on certain other things to gather information. So there's still a space or a vacuum of information that need to be filled. Companies actually really need to take the opportunity to share information right now, so that there's a ready market out there to consume this information. And this is truly not the time to really keep quiet and stay low. It's really the time to be more upfront, to communicate with the shareholders, with the investment community.
Yeah, no, El, that's an excellent point, because you see, you need to seize the narrative, because you're right. I mean, right now, there are investment bloggers. I mean, there are people who write about companies. And if you don't say anything, then what happens is all these bloggers and people who have run these websites with giving so-called investment advice, they'll be speculating, they'll be writing all kinds of things about your company, right? Which may or may not be true. So if you seize the narrative and you put out your statement, then everyone will look at that. And even these so-called bloggers or investment writers, they will also look at it and they say, okay, then they will tailor their advice or their analysis according to what you've said, rather than have vacuum and they'll just speculate. So in a way, seizing the narrative at this point in time, particularly when everyone only has the screen to access information, can't talk to anyone, really can't meet up, is in fact now's the time, rather now than when things are back to normal. It's ever more important. That's a very good point. Yeah. So I think I'm mindful of the time as well. I think Sherwin probably has a couple of things he wants to get off his chest. So maybe I'll just circle back to you quickly before we close off the discussion and we start to look at some of the questions that are put forward. Sherwin.
Sure, thanks. Well, I think most of the discussion points have already been covered. Just the last part that I didn't mention that I would cover is basically when companies are trying to assess whether they should make an announcement as part of their results announcement on what is the impact to their business or do a standalone announcement. I think it's quite important because the situation will be quite unique to each company. So it's also important to assess to what extent you want to say and to what extent the current situation has impacted the business operations. So you don't want to, in your results announcement, you don't want to have like 1, 2, 3 pages, write up on explaining uh, what impact the business has. So I would rather suggest if you want to talk quite a bit about the measures taken by the company to explain how it has impacted, what they intend to do a separate standalone announcement. So, as shareholders or, when they are going through your company's announcement, it stands out over there as a separate announcement. And they don't need to click on your results announcement, go down page number 10, 11, 12 to find out what impact your company has or what measures your company is putting in place to tackle the situation. So all these things are also quite important to consider.
Yes, indeed, indeed. So, I mean, I think on a net balance, it sounds like there are more positives than negatives in actually releasing a standalone announcement. And when there's anything really to say it rather than keep quiet and be subject to speculation or to wait to your periodic announcement, by which time it's buried away somewhere. It could also well be too late. To have a meaningful discussion with your shareholders. So, okay, I think with that, I will move on from here. We can move on to the Q&A.
The first two questions that we have is actually on sustainability reporting. First question, I would be interested to know what information stakeholders need to judge the effectiveness of an SGX company in its sustainability reporting in response to COVID-19. And are there any specific disclosures required by an SGX company under sustainability reporting disclosures?
Well, with regard to the disclosure in the sustainability report, I believe the requirement for the disclosure may fall probably in your report, which might come out at the end of this year or maybe next year. So maybe at this point in time, the companies should consult with, I believe a lot of companies out there are in constant discussions with their advisors who advise them on the plans or measures that the company needs to put in place, and also what can then be disclosed in the sustainability reporting. So I think you all should start discussing with these consultants as well right away to understand what additional processes the companies would need to put in place in terms of, let's say, if you're in a business of healthcare, what are the ESG factors that are material considering the COVID-19 situation, and how the company has been operating, and what are then the key targets that you can include in your report and look forward from there for your next report. So, at this stage, it's more of having a discussion with your consultants and to understand what processes you need to have in place at this moment, because your disclosure will only come at a later stage.
Yeah, as far as we understand now, I think the SGX has not come up with so-called additional requirements for issuers. But I think really, if we look back at the reason or the objective of why issue sustainability report, I think we still fall back on the same thing. Sustainability is really about looking at how the business, in terms of all the ESG factors, and also in terms of what the risks involved and how the companies address such risks. So right now everyone is encountering this COVID-19 pandemic, which has long-lasting kind of impact to businesses. And again, companies, if they follow the current guidelines that are already been stipulated by SGX, they would have gone through, okay, my business, is conducted in this way and affected the factors in such manner, and therefore, then they need to make changes accordingly. Like I say, whether production is being affected, service delivery mode, in terms of even logistic transportation, etc., in terms of consumption of energy, instead of staffing and employment. So these are all factors that companies actually look at when you do sustainability reporting. Right now, does COVID affect these factors? If it does, then they will just have to report accordingly.
Okay, the next question is actually to Rick. I think a materiality yardstick should not be defined by the auditing standards. So, what do you think, Rick?
Certainly, the materiality, first of all, is a very subjective matter. Even from the auditing standards point of view, they don't give you very clearly how you should determine materiality. Because so one firm to the other, they may have different ways of calculating their materiality. But as far as this disclosure is concerned, it's not from the auditor's point of view, it's more from, again, the recipients, the stakeholder point of view, right? So whether this impact is material or not, it should be looking from that stance and not really from the auditing standpoint. So I have clients who ask us whether it's material enough to be disclosed. So really, we pose that question back to them. She don't like to do that, but anyhow, this is the way we have to do it, because it is again not from the auditing standpoint.
Yeah, so I guess you would agree with the statement made that actually it shouldn't be viewed through auditing standard lens. But in fact, actually, it comes back to what Elle said. Actually, it should be viewed from the lens of whether a shareholder or investor would deem something to be material and use that as a benchmark. And that will definitely vary from business to business, size of the business, nature of the business. Okay.
Our next question. Many companies have been exempted from quarterly reporting. Given the current pandemic, how would I, as a shareholder, be able to ascertain how a company is doing? Do you see many companies do some form of brief reporting, example, sales and MPAT numbers?
Well, actually, Sherwin, I think you have seen it, right? Definitely, there are companies who are releasing abridged reports.
Yeah, there are short format of reports. Well, even when the quarterly reporting, the requirement was, or rather, some companies were exempted from the reporting requirements, Exchange still did put in a statement to say that as and when there are any business updates that would be relevant to shareholders, there is a abridged reporting format that companies could use. And they could also use, well, although, having a boilerplate format may be good for certain kind of disclosures, but sometimes these boilerplate formats also may not add value to what you want to say. So for disclosures related to impact on business operations, I think there's no prescribed format, and companies have been coming up with their own way of disclosing, especially focused on what's critical, where it has affected the most, and what key aspects have they been doing to mitigate such things.
Yeah, in fact, I think your answer has touched on the next question, actually, right, Leonard? If maybe you could...
That's the question.
Actually, on this quarterly, on this reporting or quarterly reporting, I have just one point to note that from the perspective of investment community, particularly from analysts who are covering companies, they actually look forward to this more frequent kind of a number so that they can plug into a financial model and have better forecast for future earnings. If earnings are really mandated and only, or companies only follow the mandatory half-yearly announcement, this is not granular enough for analysts actually to look at seasonal changes. We know that majority, although not all, but majority of companies have certain form of a seasonal kind of earnings pattern or revenue pattern, that or this quarter they have more because of a certain holiday period, another quarter they have more because of what. Although of course there are companies that have big ticket items, when they complete it, then they get the money. For example, property developer or construction company, their size of contract are various amount. But for most other companies, income is come in terms of daily or weekly. So seasonal kind of changes is really useful and important. And a loss of this granular analysis actually is quite a loss in terms of a earning forecast blind spot, that they can't fairly quickly know that in first Q of 2020, what has happened? COVID has stepped in, but what has happened? Companies have stopped reporting. Only companies that voluntarily report provide some form of clue as to how they are affected. So and even though if they provide eventually a full half-yearly results, there's still no quarter one impact, quarter two impact, etc. So such kind of information would be lost, even though companies were to just follow the mandated half-yearly reporting. So at this point, really, for those companies, I would say that take voluntary announce quarterly numbers, maybe not in a full format, in some useful formats, whether it be in terms of revenue, operational profit, be it of cost and expenses, and present it in a certain table form or graphical form. I think the investment committee would greatly appreciate, would be able to understand better how the company has been impacted, not just within this COVID period, but even post-COVID period, when they can compare more meaningfully quarter to quarter kind of a trend, and then year to year kind of trend in a quarterly manner.
Yeah, so actually, in a way, the timing of the removal of the quarterly reporting or the mandatory quarterly reporting coinciding with COVID-19 is actually pretty not very good timing, in the sense that there's this sudden black hole where I think a lot of analysts and investors are precisely wanting to know what is happening. And because the companies are no longer required to do the quarterly reporting, they don't. And there's just rife with speculation. So putting something out there, a bridged report, for example, at this time would be lapped up, I think, by shareholders, and particularly by investors and analysts, right? I mean, that's basically it. So in a way, anything you put out now will have double impact, triple impact, because people are really, really looking for information.
The next question is, companies struggle with a lack of boilerplate template for disclosure. The other challenge is also timely and accurate disclosure. In a regime of expecting no surprises to investors as well as to the regulators, some companies feel that our regulators might not be ready as yet for a free format disclosure. Example, if time-sensitive information is left to the consultation of the panel of experts as well as regulators, might render the disclosure untimely, ultimately as not timely. So how much time should we be used as the yardstick before the board just have to make that announcement?
Yeah, I mean, this question is precisely flows from what we have discussed in terms of now that the timing alone has become more free form, because it's only 6 months, and really increasingly I think that really may not be sufficient really in this climate. It's and how not to surprise investors, it is very challenging. I mean, my own view on this is almost to the extent where if you have something to say, anything to say it, unless you got absolutely nothing to say. But otherwise, if there is something that you can say, think about saying it, putting it out there. And I suppose in terms of timing, whenever it arises, whenever those events that have come to your attention, be they financial or otherwise, and you say, okay, maybe we should just share this information. After all, there's this guiding principle having parity of information for everyone, because you may have some internal shareholders like employees that they may know certain things, but your external shareholders wouldn't know. So parity of information is also important in that sense. I mean, again, open to your views, Sherwin or Al or Rick, any of you. You think so?
Well, as I mentioned earlier during my brief discussion on the timing of announcements, I would err on caution that companies should try and avoid to time such announcements, in the sense wait for certain things to happen, and announce it, let's say 1 week later, just because it may work in the company's favor or may not, right? Because it could be seen negatively. But then again, the regulators are not there to punish companies for not doing an announcement which they were supposed to do 1 or 2 days earlier, right? The whole intention of this is to give some guideline to companies that if the companies assess that there is an impact to their business operations by looking at the few points that exchange has listed out, then how can companies address it, rather than previously just relying on corporate disclosure policies which would not have covered all these assessment factors by considering before making an announcement. So as soon as the company makes an assessment, is aware that yes, at this point in time there is going to be a business impact, just state it out factually rather than putting any form of a speculation out over there.
Yeah, I think that's a good yardstick. It says when the company has formed a view that yes, this is going to have a business impact, that could probably be the right time to put the statement out. Yeah.
The next question is, if the impact to bottom line is going to be cushioned by the government grants, for example, no material change to the bottom line after considering the GSS grant, do we still need to make an immediate standalone announcement?
I suppose that is a bit of a timing issue, is depending on when the grants come in and when you see that impact happening. Because I mean, the grants come at a periodic time. They don't come all the time, every single month, right? So maybe every 3 months or 2 months, depending on what the grants are. And when are you assessing? When are you actually scheduled to release, say, a regular periodic announcement? Anyway, and I think that's something that Rick had mentioned earlier about, I think companies look at it holistically in terms of the bottom line, right? They don't just look entirely on just the revenue or just on one component. I mean, we have seen in as the paragraph 10s of a lot of listed companies, they like to use the word offset, right? The lower whatever was offset by the higher this and this and this, and the net effect, therefore, there is no material impact, to the bottom line or something like that. So that's also something which, is you see that quite often. So I suppose in my view, there are two factors here. One is the timing of when the grant comes in versus when you see this impact happening, and when, I mean, the gap is too big. In some companies, it is because you're getting hit now very severely. You've just lost a major contract, or there's something going on. But at the same time, you have to close your operations right now, and there's an immediate impact. But the grants are coming in only 3 months later. In a situation like that, I don't think you can wait 3 months to wait for the grant to come in and say, net, there is no impact. In a situation like, you probably need to release a standalone. But in a situation where, where this impact happens, but the grant is also coming in shortly after, then perhaps you can release one of those announcements that say, this was offset or partially offset by that, and therefore the impact is not so severe. And of course, it also depends on the quantum of the benefit you're going to get from the grant versus the impact. So when you say, the question says is cushion, but if the cushion is not a very good cushion and you're going to still feel the impact when you fall, then I think you probably still need to announce it. But if the cushion is quite a significant one and the timing is quite close, then maybe there's no for that. Next.
Actually, I would like to add that
Yeah, go ahead.
we should as in this point of government grants cushioning certain impact, we see that the government grants are somewhat also say short-term measures to cushion the immediate impact. But yet we are sensing that the impact to businesses is a more longer-term issue. So ultimately, the impact on revenue, on loss of customers, etc., will in the longer term drag on more crucial in the bigger manner as compared to say a government kind of support. Although the government come up with four budgets, but we are seeing that the help come in a small packets of stages, and it's not something that it will be until the end of the year or until 2021. And companies, I would say that if they right now they start to do their own planning for towards the year end, towards next year, they perhaps will see that the impact will come in a more drastic way in the longer term. So ultimately, the way between the two is really to look at the impact on top line. What is like government provides support, how much costs and expenses are you able to reduce? So, and these are, as I say, more on a short-term basis. And after, if they are not there anymore, what's happened to the company? So I think these are issues that I think companies are already looking at. They ought to take this into consideration in how they disclose what kind of impact they have on the bottom line into the longer term.
Yeah, I mean that's a truth. I mean the government cannot keep supporting businesses forever, but the impact faced by businesses are probably going to be more longer term than what the government can support. So at some point, basically, you might have to say certain things to shareholders.
Yeah, down to our one last question. Do you think the latest disclosures by Brave Liscos to take the first step was really because the impact has already been factored by the investing public, SIA, for example, and also FMB? So might be a case of that it cannot get any worse.
Okay, I think that I will answer that, but I think Elle might have some view on that as well. I think that's absolutely right. I think for some businesses, either it is so public or so obvious that by not saying anything, people are already automatically going to assume the worst. So you might as well say something and have a chance to again control the narrative, or at least steer the narrative to say, okay, notwithstanding everything that you read or everything that you probably know, for example, we've got a strong balance sheet, or that we've got a lot of cash, or that there are these things that we're doing to survive. So I think you're right. I mean, to some extent, it is well, they are brave, but maybe it's also brave. Some people are born brave, but others have braveness thrust upon them because there's no other choice. They better say something rather than keep quiet and let people assume the worst. I mean, Elle, what do you think?
Actually, I look at it in this sense that firstly, of course, when there was still very little disclosure from companies when COVID impact, and we are seeing that they are already closed. When the circuit breaker or MCO steps in and it affects businesses in a big way, travel is being affected, and then industries be it hospitality, be it events management, be it tourism, they are mostly affected. And the way from the investment community response is that that these companies are going to get hit very badly. Whether they are termed as brave, I would say not quite, but I would say that there's a need because people know already, these industries are being affected, so they have to say something to address their investors. Say something as in what kind of impact they face, how long term the access is going to be, what is the help that they have received from the government, and therefore what kind of things they may expect to do. We're already seeing chains like certain retail chains have closed down their outlets, and some are not just Singapore companies, they are also the more regional companies from Hong Kong or elsewhere, and they are infected fairly badly. Retail face the issues of this closing of outlets. So they have to say it because it impact them, and I would say that it's not so much that it will not get any worse. In fact, we can't tell how worse it's going to be. We still can't tell here. Yeah. I would say that it is born of necessity that investors know that certain industries, companies are affected. They would then be obliged to be or compelled to announce their so-called countermeasures, and then as the pandemic developed, how much worse it's going to be.
So thank you everyone for asking the
Yeah.
questions. If there's any questions that are still unanswered, we will take it offline. Also, after this webinar, we'll be sending a email to all the attendees here. If there's anything you need to ask our panel, our panel of speakers, please do address the questions and move forward to the relevant speakers to address them. So if there's nothing else from Eugene, we will close the webinar. Eugene?
Yes, thank you so much. Well, firstly, I need to thank all the panelists for taking time this morning. Sherwin, Elle, and especially Rick for joining us for this session. I think it has been very useful, I feel, and illuminating. Hopefully the audience has found it so as well. And I'd like to, of course, to thank the audience for taking nearly 2 hours of your precious time this morning to attend this. So thanks everyone, and keep safe, and hopefully we will be able to meet in person sometime not too far in the future. Okay, thank you very much. Thank you.
Thank you, panelists.
Thank you.
Thank you, attendees. Thank you very much. Have a good day ahead. Thank you.
Thank you.